Ric Dillon. Diamond Hill recently launched the Value-Weighted 500 ETF, ticker DHVW. Tell me, why does the world need another large cap ETF? What makes yours different?
Well, ours is different from all the other offerings in that it's forward-looking. It uses forward estimates, discounted back to the present, to estimate the intrinsic value of a company. And so while all the others of the second generation passive strategies are backward-looking, this one is forward-looking. It also is different because it assumes mean reversion of capitalization rates. And it's also different because it includes the balance sheet into the calculation through tangible book value.
Can you explain what intrinsic value means to you? Warren Buffett talks about it a lot. So how does it work for Diamond Hill?
Well, intrinsic value, broadly defined, is what a company is worth. Of course, what a company is worth is based upon the future, and no one knows the future. All we can do is estimate it. That's why we say we are estimating intrinsic value. But it's what the company truly is worth.
All right, let's talk about the DHVW itself. What actually is in it? I know there's a lot of Apple at the top. I think about 4.5% is in Apple. What about the rest of it?
So there are 500 securities in DHVW, and we take the 700 largest companies, do the estimates of intrinsic value of those companies, and then the largest 500 based on that intrinsic value cap weighting is what constitutes the index.
And this is a new ETF. This strategy has been around for a while at Diamond Hill. Can you explain the history and the back testing of it?
Sure. Well, our company, of course, goes back to 2000, and actually prior to that I had started this strategy in 1998, but when I started Diamond Hill in 2000, we focused on our active strategies. Then at the end of 2011, we formed a limited partnership and put corporate money and one client into this new strategy, which is what rolled into the ETF on May 12th.
And who is this targeted towards? Is it for individual investors or institutional investors? So who are ultimately your targets for the DHVW?
Yes, anyone who uses passive strategies, S&P broad cap weighted strategies, or anyone who uses what I call the second generation or strategic beta, as some people say, those would be our target audience, both individuals and institutions.
All right, thanks a lot, Ric.
All right, thank you.
Thank you for watching The Street.